Wendy's is testing out a new dynamic surge pricing. This is bad news for consumers, something that we don't like to see. If you guys are new here to the channel, my name is Jonathan. This is Gig Nation. It's been a long time since I've posted anything on the channel. I really haven't been spending that much time on YouTube, but I keep seeing articles like this about inflation, about companies, raising prices, and it pains me. It's something that I feel like I want to talk about here on the channel, so I decided to dive into this a little bit today. The inflation picture in general is not looking good out there. I know that we've seen inflation come down. That's what the Fed's been talking about. That's disinflation, it's not deflation. Disinflation means that prices are still going up year over year, but they're going up by less. So for consumers like you and I who may not be getting wage increases, we're still seeing prices get more expensive. It's still hurting us. And then to see news like this where companies like Wendy's are using dynamic pricing to squeeze, nickels and dimes out of their consumers during the busiest hours, it's really not something that I'm happy to see. So where exactly did this idea come from? I mean, the most well-known example of it is definitely Uber Eats, DoorDash, where they use surge pricing to charge more during those peak on-demand hours. I know a lot of you guys are out there delivering, and you see this all the time. You see higher pay bonuses during those hours. It's not as good as it used to be. The apps are taking a lot more of that pay that they're getting during surge pricing. Really, that extra consumer pay during those hours is going more to the corporation than it is to the drivers. We're probably going to see the same thing here with Wendy's. And not only is the food going to get more expensive for consumers, but it's kind of a bad deal for delivery drivers because they're already getting squeezed. Their earnings are less due to inflation. I know a lot of you guys are seeing less orders out there during these times when consumers are starting to struggle. And if prices are raised even more, then that just becomes difficult for consumers to really handle those price increases, and they end up just pulling back. So what exactly is the plan here? What's Wendy's going to do? It looks like in 2025, they're going to be rolling out these changes. They're going to have new technology, built into those screens that you see when you come through the drive-thru. There's going to be some AI ordering, so they're already replacing, maybe some humans that would be working inside with these AI assistants that are going to try and get you to upsell and buy bigger offers, get a Frosty when you really just came in for that deluxe. And then with that new AI technology, they're going to be pushing those price increases. That's really what we don't want to see. We don't want to see the price increases. Most analysis is saying that these are going to be really small incremental price increases because people at Wendy's corporate are scared that if they try to raise prices too much, they're going to scare consumers away. But in my opinion, if consumers see any sort of price increases, they're going to be quick to switch to other competitors, because in a market like fast food, in a market like restaurants in general, there's a ton of different options. So at a time like this, when the economy is kind of tight, people are easily going to switch over to the next best thing. But it is important to note that not all of the analysis surrounding these potential changes coming out from Wendy's is negative. Personally, I think it's a negative thing. I think a lot of you will agree this is not a good thing, but there have been some insights, some people saying that if Wendy's is able to be very, very smart and nuanced about how they change prices, very incremental to a point where consumers don't really notice they're getting charged more, and potentially bundle them with deals and discounts where, if a certain type of food in the Wendy's restaurant has been on the shelf for too long, they can offer deals to customers. And so customers feel like, these potential increases are paired with savings. If they're savvy, maybe they're getting more of the savings. So they could potentially continue to be loyal customers. But whether or not this is the case, I really think it's important here that consumers boycott something like this, because if this shows to be a positive for Wendy's, if this helps their bottom line, if they come into the first quarter out of 2025 and they see increase in profits here, you're going to see a lot of other companies hop on this trend, not just fast food restaurants, but fast casual restaurants, big players like Chipotle that do a ton of volume. And when you're in the food delivery business, you don't want to see more dynamic pricing during these rush hours, because that's bad for business. That's when you're making the most money, and you don't want consumers to get scared away by higher prices. Now, some insight from John Dismore. He's a marketing professor at Wright State. He tells us that consumers are understanding that companies need to make a profit. That is how capitalism works, but they are also very willing to push back when they see unjustified price increases come through companies. And there's a lot of leverage to push back in this industry. So it's very possible that consumers do push back. That would be a huge positive, a huge win for consumers here, during these times that can be so tough for people to pay the basic bills that they need to pay. And on top of that, just having price increases on what's supposed to be the cheap food. I mean, we've all seen the news videos out there of restaurant owners who are in these middle tier restaurants that are not much more expensive than fast food, maybe $1, $2, $3 more for dinner, like $13, $14 to go out to dinner. They're seeing a 20 to 30% decrease in profits because consumers are pulling back. So I think there's very little room here for these fast food restaurants to play. They've already increased prices so much. It's already been so hard on consumers that they don't have much room here without getting a big pushback. And we have seen similar tactics by the likes of Coca-Cola. Around the turn of the century, they decided to take all of their vending machines and upcharge customers during hot days. So if the temperature was above a certain temperature point, they would make their Coca-Cola more expensive and try and get more money out of that. Consumers absolutely hated it, pushed back, and Coca-Cola canned the idea. So it's very likely, I think, that we see something like this happen for consumers because inflation is just outrageous right now.